Hi there. Welcome to today's analysis of how stocks have performed at the Nairobi Securities Exchange today, 14th of July, 2026. And today, the market is remaining stable because NSE continues to adjust after several weeks of steady gains. So we are seeing some stocks go up in price, others go down. But overall, the market is healthy, strong momentum, good fundamentals, and also profit-taking continuing. Now, let's look at the individual sectors. When you look at the agriculture sector, the company with the biggest gain is Kapchorua Tea Company Limited, which gained 6.48%. Of course, this is a recovery from yesterday. Remember yesterday, the share prices of Kapchorua Tea Company Limited had dipped. Is the one which had dipped a lot in the agriculture sector. Okay? And this positive adjustment is because of correction from the price taking, which happened yesterday after a strong rally. And also remember, investors are looking forward to the expected end of July dividend payout by Kapchorua Tea Company Limited. And then the company with the biggest loss in agriculture is Kakuzi. Kakuzi did lose 0.11%. This is due to mild investor caution following a ruling by the Environmental and Land Court on 6th of July, ruling requiring the company to cede approximately 3,200 acres of land. So this is also reflecting some of these share prices adjustments in the market. And then onto the second sector, automobile sector. Today, automobile remained unchanged. Of course, yesterday, the share prices of car in general really increased, but today it's remained unchanged. And this is more of a balance, okay? Investors are basically balancing the positive company performance with regards to strong profit growth earlier in the year and even recent dividend announcement, and also some of the effects of the Finance Act. For example, the requirement around marine cargo insurance and even requirement around increase in excise duty on specific types of vehicles, okay? And then let's move to the third sector, the banking sector. The banking sector has seen interesting mix of results. Of course, we all know the banking sector really had an amazing run throughout a good chunk of this year, okay? And so this sector is having a mix of results, but the company which stood out today is HF Group. And by the way, also yesterday, HF Group is the one which stood out. And this is because today it's gained 1.37% on its shares. And this is supported by continued investor confidence following the earlier in the year huge profit jump. Because HF Group's profit jump as of close of last year, we are talking about 250% profit increase, whereby the profit hit 1.6 billion. That is a key fundamental when it comes to company performance. And also beyond that, is continuing to strengthen its loan books with even state lending. That has really upped investors' confidence. And then, when we take a look at the company which lost, KCB Group did lose 1.84% on its share today. And this mainly driven by profit taking and routine portfolio rebalancing. So in the banking sector, even the companies which have lost, not really a big cause of alarm, okay? And then the fourth sector, commercial and services. Under commercial and services, we've had a mix of results. Of course, the biggest recovery is Standard Group, which did gain 4.29%. Remember yesterday, Standard Group shares did dip by over 5%. So this is more of speculative buying and also recovery due to sentiments broad across the media sector. And another company which did gain is Express Kenya Limited, which gained 3.77% on its shares. And this was driven by investors' optimism following its AGM and approval of a rights issue to raise 250 million Kenya shillings to reduce debt and support its real estate operations. So that has really boosted also in investors' confidence. And of course, the company which hit the negative under commercial and services is Nation Media Group, which did lose 1.54% on its share. But then again, this is also an adjustment from yesterday's profit taking and just the broader reflection of how the media business is quite complex due to ongoing revenue challenges, which are cross-cutting across the different media houses, okay? And then the fifth sector, construction and allied. Under construction and allied, the biggest gainer today was East Africa Portland Cement, which did gain 7%, a whopping 7% increase in its shares today. And this was boosted by growing investors' confidence following its restructuring efforts. If you remember very well, East Africa Portland Cement was acquired by Tanzania's Amsons Group sometime end of last year. That restructuring, which has been ongoing, seems to be reflecting also in the share prices due to boosted investors' confidence. And then the company which lost under construction is Crown Paints, which before was called Crown Berger, did lose 0.84%. And this due to routine market corrections and lingering impact of restructuring its regional subsidiaries following some losses, okay? And then the sixth sector is energy and petroleum. This hasn't really changed much from yesterday because the biggest gainer under energy is KenGen, which did gain 1.11% on its share. And this supported by renewed investors' confidence, buying interest due to the huge KenGen announcement earlier in the year, where KenGen is looking to go very hard on renewable energy. And that's really going to boost KenGen's fundamentals and also, by extent, its performance in the market. And then the biggest loser under energy and petroleum is a company called Unga Limited, which did lose 2.97% on its shares. That is not really a big issue because remember, Unga Limited is a Ugandan company. It is cross-listed at the NSE, and this was due to the major distribution of electricity work it was doing in Uganda, which of course, after its over 20 years of its having the rights to distribute electricity in Uganda, it did seize back the distribution rights to the government of Uganda end of last year, but it's still cross-listed at the NSE, I think is in the process of wrapping up. So that shouldn't really impact you or whatever investment decision, because either way, Olympia Limited I expect in the coming future to kind of also scale down operations and even maybe end the cross-listing, okay? And then the seventh sector is insurance. Under insurance, the biggest gainer today is Britam Holdings. Britam did gain over 7% on its shares, and this is extending its last week strong rally as investors continue responding positively to the company's balance sheet restructuring, which did happen sometimes in Q1 of this year, whereby it got improved prospects for future dividend payout. It did restructure to find a way of adjusting some of the losses and even relationship with its companies just to ensure that things are good and investors can be able to get paid dividends in future. That has really boosted its share prices and performance in the market, more so in recent weeks, today gaining 7%. And then the company which lost a lot under this sector insurance is Liberty Kenya Holdings, which did lose 0.66%. And this is more about mild selling pressure, not really anything very huge regarding this particular company. And then sector number 8, investment. Under investment, today we're seeing interesting results which are separate from yesterday. The biggest gainer today in this sector is Olympia Holdings, which did gain 0.86%. But then again, in case I'm an investor on this particular stock or I want to buy it, I'd be very cautious. Reason being, yesterday it did dip a lot. Today it just gained a little bit, reflecting the underlying concerns or gap in confidence that investors have, because Olympia Holdings did hit the lowest ever in its earnings sometime earlier in the year when it declared its earnings. And that has been lingering on its stock in the markets since that particular time. And then the biggest loser today is Home Afrika, which did lose 1.64% on its stock as investors' caution persists over the real estate sector and uncertainty surrounding the company's future revenue growth and direction. So that is also reflecting in Home Afrika performance at the stock market. And then the ninth sector is investment services. Under here, we have NSE self-listing, and it did gain 2.37%. This is the reflection of the broader market sentiments and adjustments happening since the market opened yesterday. And then sector number 10 is manufacturing and allied sector. Guys, this sector has been having an upward rally and mix of results too, okay? And today the biggest gainer has been Unga Group, which did gain 4.53% on its stock. And this gain is due to continued buying interest by investors, supported by its strong earnings sometime earlier in the year, whereby its earnings did increase by 500%. And beyond that, also there is a recent attractive valuation, which has really boosted confidence when it comes to Unga Group Limited, okay? And then the biggest, also another gainer in this sector is Afri Mega Agricorp, which did gain 3%. But for this one, it is more of yesterday's, it had a sharp decline. So it is bargain hunters return to this particular stock, honestly, okay? Because yesterday it did dip more than 3%. So it gaining 3% today is not really that much of a big two-day net adjustment, okay? And then the 11th sector is telecommunication. Under these, we have Safaricom. And today, we've seen Safaricom shares dip a little bit, okay? It did dip by 1.39%, okay? This dip of 1.39% by Safaricom is a reflection of what is going on. You see, investors' confidence, of course, it's very high because the company is mature, it's doing very well. But then again, remember recently, the government of Kenya did cede 15% of its ownership in Safaricom to Vodacom Group. That is also reflecting in these movements in the price of these shares, because these, we're going to see how it's going to perform more so in the coming weeks. There's an upcoming AGM by Safaricom at the end of this month of July, and these adjustments is built into that. So we're going to see some increase and also decrease in the stock of Safaricom in the coming days, okay? And then under real estate, there was no price change. And this so because typically REITs, their price is closed-ended, okay? Unless the parties to that particular structuring make any major movements, the price are going to remain the same. So the two REITs listed at the NSE didn't have any movement. And then the 13th sector is ETFs. Under ETFs, both ETFs did dip today. Of course, yesterday, the new gold ETF had dipped in price. Again, today it's dipped further, a reflection of the decline in international gold prices, because this ETF is anchored on gold. So if gold price dips internationally, then also it's gonna dip within the country because the underlying or the backing asset has reduced, causing there to be a dollar pressure, which in effect has made the stock or the share price dip today. And also the Satrix World equity did decrease by 1.71%. This is also reflecting weakness across its underlying global equity holdings, because if the aggregate is that the equity holdings did dip, also the ETF is going to reflect that. Guys, that is your today's report on how the stock market has performed today. The NSE with interest on shares and the equities, how they performed. What do you think about all this?